Hello and welcome to another update video about Ethereum. So on the Ethereum chart, we can still see the market is following that yellow scenario we talked about yesterday. The price did hold those previous swing low supports here around the 2,300 level, 2,330. And we seem to be moving up in what would be wave C of E of B in the yellow scenario. And the 100% extension still remains one of the key targets for wave C in yellow. And it's at 2,538, and we are currently moving towards it. So there is not really much new stuff to talk about. Also, from a micro level point of view, this structure is not clear at all. Might be even a wave C as a diagonal. There's just nothing in there that I could use to come up with a micro count. It would be unreliable. However, if really a C wave to the upside is now unfolding, ideally we want to see a break above 2,358. And then we can take it from there. I mean, if the price gets there and breaks through, that opens the door to 2,591, 2,624 and 2,679. So this gives you actually all the relevant resistance levels here on the, let's say on the micro level, that are relevant for wave C of E of B, which is a triangle pattern. As per previous updates, the yellow count is an Elliott wave triangle that is labeled A, B, C, D, E. And the E wave, as I said, could complete here this entire triangle. And then usually we would watch for a breakout to the downside, at least be on alert, okay? Now, a triangle isn't broken until it's broken, obviously, but it means this is an area where, with an increased probability, the price could sort of start a move down. I have a more directly bearish alternative as well. We could say that maybe even the decline is a 5-wave move, but then instead of yellow wave B, right? So it could be a 5-wave move, but then it's a bit of a questionable structure. So that means if we now don't move any higher, instead break down directly, then this is a 1-2 setup. So wave 1 to the downside, wave 2 to the upside, but it would require pretty much a breakdown from here and a break below the Thursday low. I mean, that would be confirmation that a third wave to the downside is likely taking us towards, let's say, 1,800 or so. But it takes a break below the Thursday low at 2,328. And I don't trust it because this move down looks just too corrective for a 5-wave move. But it is a valid interpretation. I can, if I count it slightly differently, interpret this as 5 waves. So 1, 2, 3. Oh, that was ugly, sorry. 1, 2, 3, 4, 5, yeah. But you see, this is a diagonal pattern that I would not label as such. I just want to mention it because someone asked me what happens if we don't even get to the 100% extension. And then again, it doesn't make a great difference because C waves don't need to be that long, but ideally they are. So it would increase probabilities. It's something different if we can't even break above the October high, which was labeled here at 2,522. But overall, we are still in a sideways range. Of course, there's a bullish scenario as well. But I would, that blue, let's say pivot, that blue resistance area, or let's call it target area for wave C in yellow, that stands between the triangle pattern, which could break to the downside, and the more bullish interpretation in the white wave count, which is somewhat questionable, where we are working on a larger diagonal pattern, and Ethereum just hasn't shown us any confirmation for that. All the rallies from the August low have been corrective, and it's still behind Bitcoin, right, in its performance. So we're just moving sideways. I would absolutely not be surprised if this chart breaks to the downside. In that case, on the larger time frame, 1,800 is next support, which means on the weekend, the focus should be on the blue target area, as well as the last swing low at 2,328. That's the update about Ethereum. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.